Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This is by Peter Ustinov. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We have the Dow Industrials up 5, NASDAQ is down 4, S&Ps are flat, gold contract is down 70 cents, trading at $1,224 an ounce. Silver up 8 cents at $17.55 an ounce. Platinum up 10 at $1,168 an ounce. Light sweet crude down 17 cents at $60.66 a barrel. Bonds, you have the 10-year down up 21 ticks at 128.02. That 30-year up 2.5 points, almost 3 points, folks. 2 points and 19 ticks at 155.18. And King Dollar down 280 ticks, trading out at 93.22. The euro is up 46 at 114, and the yen is up 13 at 119.30. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You have option expiration, folks. We're going to have some juice on the close here, that's for sure. But intraday, you still don't have anything out here. We're at the highs. If you take a look at the SPY, we'll take a look at the SPY first. You put the SPY on the daily. You're hanging right at these highs. The first high that was established out there was 212.24. That was established on the 25th of February. Second high was established on the 22nd of April. That was 212.48. That was 79 million shares. The first high had 76 million shares. And right now, we're at 52. We'll come in at about 62 million. Now, that's on the daily. So bottom line, you know, we'll see whether it can break topside, but that's a nice, sweet triple top at this particular point. Now, we take that and we put that on the weekly. And what you're going to see on the weekly is this. The weekly volume contraction also. Price is still hanging at the highs. If you happen to be into candlestick charting or counselor charting, what you do have up here is that your first high was a little inverted hammer. That was from the 27th, and now you have two long hammers, hanging men rather, at the highs. So we'll see where this shakes out. That in itself, though, they are bearish between the triple top and the hanging man, folks. Those are bearish indicators, and notwithstanding the volume. Of course, we have gone to higher price with the light volume. But bottom line is that it's just a matter of when the turn comes. We take a look at the 3 Qs. What do you have with the 3 Qs? The NDX 100, what we have with the 3 Qs, we're trading out at a price point of 109.57. The high up there is the 111.16. The bottom of that high is the 110.02, and we hit 110.01 today. Volume's got to be anemic. That's the bottom line. You know, we'll see whether it can even hang on to the 109.42. The 109.42 area is the first high that was established out there on March 2nd. Gold contract. What do we have with gold? Bottom line with gold, folks, gold rejected lower price out here. Had lighter volume. Gold setting up a nice ABC structure on the way up. The gold contract traded down to 12.10 today. Rejected that price. You're at 12.24. Nice setup. You've done 125,000 contracts. That 125,000 contracts was coming into 242,000 contracts. The way this little baby's set up right now, first off, you have an ABC structure up to the 1246 area. The way this baby is set up, you can make the case that you got 1178 to 1225. So you get another $50. On that baby there, you get the 1260 level. So what I suspect you're actually going to see out of this is that this thing is going to run up to the highs that were generated out there in January of 1308. That there's no doubt that will put some not only conviction and expansion behind the move. What will happen if in fact we close at this 1224 is that is going to put the gold contract itself over the 200-day moving average. And this contract hasn't been over, well, we got over the 200-day moving average from January 20th till February 6th. But other than that, let me just see. Let me pull this back because it's been a long time. Let me tell you that. There's no doubt about that. We got over the 50, but if we put this on, whoops, put this on a daily. Let me see how far I got to go back here. Yeah, you go back quite a way. So this is what we've done. You know, the last time when we tucked our head over it, it hasn't stayed over it. That's the bottom line. We'll see. I'll see this time if, in fact, we can get up and over and stay over that little baby. Bonds. Now let's go into the bond market. We'll take a look at the TLT first. The TLT is the 20-plus bond. That little baby has gone south and big time. Two separate trends on the way down. We're trading at 121. We started out at 138. This is bouncing on dramatically lighter volume, folks. The way this is set up right now, this is setting up an ABC structure on the way down. The TLT is at 121.58, and I do expect you can get a bounce somewhere into this 122.97, where I'm going with that. That is the lows that were established on March 6th. So we started at the highs with January 30th. You trade in 138. You go down, the first leg down took you to 122 March 6th. You bounced up to 132, then you came all the way down to this 118 area. The 30-year bond out here today, it has some juice in it, no doubt about that. The volume's not bad. We've done 249,000 contracts. However, it really would have to go 350, something like that. Bottom line, that little baby is trading 155.15, and that can get up. That probably can get up somewhere into. It's already taken out. This is interesting because it's already the benchmark that I gave you on the TLT, meaning that March 3rd benchmark on the 30-year. That's March 6th rather. It's already got above that because the bottom of that is 154.27, and the 30's at 155. The 30 probably wants to run up to somewhere around the 157 level. King dollar. Now let's look at King dollar. King dollar, folks, bottom line, has had it, wants to go lower, can't hold price, looks like a very large ABC structure on the way down, and of course that's after doing that 1 to 2 ABC structure on the way up. And this next move in King dollar, we very well could get into 88, and that'll be insane because, you know, you talk about fast moves. Well, actually, when you look at the chart, it doesn't look. It looks like just about the same way we went up. There's nothing in the middle here holding King dollar. King dollar, you get a little support at about 92.50. Once you break that 92.50 area, you're going to be down to 88 in a heartbeat. The way King dollar's trading right now, it looks like to me that she's going to make this attack next week. She tried to get higher today, was up 615 ticks, now down 260. Bottom line is that that's setting up a small ABC structure on the way down that very well will put some real damage into the dollar. And what does that do for commodities? And that's where that gold and silver market wants to run. It's going to put some juice inside the commodity market. The correlation there is pretty direct. What had happened, which is pretty wild, is that when the dollar was going up dramatically, gold never broke that 489 level. So gold itself was showing some big strength. We go over and we take a look at the silver market. What we have with silver is this. Silver is trading at $17.55, 44,000 contracts. That has overtaken the swing point going back to the March 26th area with volume on the daily, on the weekly. What does that set up? It's a beautiful thing. You just take the top of this right here, which is 1730. Take the bottom of it, which is 1530. Guess what? You get 1930. The next swing point up there in silver is 1850. Silver wants to move. You're going to see some real action out here in the metals market next week. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow Industrials right now up 4. You get the NASDAQ down 4. S&Ps are flat. Gold is at 1224. You get silver at 1755. We're going to be right back.